Nkonki has the professional capacity to deliver on your external and internal audit assurance requirements. Visit nkonki.com for more.
Welcome back. Mervyn King and I are discussing modern day corporate governance. Our guests are Dr. Leigh Roberts and Faye Mukadam. Leigh, in the first part of the show you spoke about legislated governance, and certainly that's the way it's carried out in the US with Sarbanes-Oxley and Dodd-Frank. Is that a better way of just a voluntary code?
I think we need a combination in terms of principles, and the King model in my view is superior because the Sarbanes-Oxley requires the compliance by all organizations that fall under the banner of the New York Stock Exchange or NASDAQ. So it's comply or else, and you'd find that companies have had to reconstitute their boards, and they've had to go to extreme expense in implementing certain controls to sign off the financial statements. When one looks at the internal controls or the sign-off by the chief financial officer. So it's put in place extremely rigorous controls, but they might not necessarily provide the returns or the value for money that one is looking for. So it's good to have certain minimum criteria as far as boards and the majority of independent directors, rotating your audit firms every 5 years, or the partners that represent those particular firms, as well as looking at internal audit and looking at the oversight of risk. But it does have its downside in that it could become a largely tick box exercise.
Yeah. But even though the American companies have SOX, Sarbanes-Oxley, GFC still happened.
Absolutely. And again, I think we touched on it earlier when we talk about when you have a set of rules in place, and whether it's abroad or whether it's here, that you cannot assume that everything will be followed with a correct value base, where there's courageous leadership, where there's authenticity, and where there's integrity in place. So even if you look at all the usually what happens whenever there's whenever there's governance crisis or collapse, you get governments over legislating, and that's what you've seen with SOX, is there's almost an overcompensation in response. Still, regardless of having the rules and the regulations in place, if you have a model which seeks to be punitive in nature, then you are not appealing towards the value base of people. So it means that individuals will seek to either do things to try and find a loophole, or will only seek to adhere to avoid the penalty, rather than because it's the right thing to do. And I agree with Len around King being a superior model, because it does appeal to a different basis, so as to avoid GFC or certain occurrences like that.
I think if I could add to that, the global financial crisis, if one tries to unpack it, it's basically a failure of risk management. How do you price for risk, and what is your risk appetite? So one looks at Lehman Brothers or Citibank or many of the banks, in looking at the concentration, that risk that they took on as far as derivatives are concerned, or housing loans, and pricing it on the basis that interest rates were going to remain low. So in my view, risk assessment, risk management, risk oversight is absolutely key, together with strategy and governance.
Yeah, and the GFC pointing out that boards didn't actually understand the risk they were under.
Risk and price for risk.
Yeah, but I want to get Mervyn's opinion, because I know you staunchly against legislated code of governance.
Yes, because it becomes mindless and very costly. The cost is estimated today about $4 million per listed company on the NYSE or NASDAQ or Chicago Exchange. And as was predicted, many listed companies in America have delisted and gone and listed in London, Paris or Frankfurt, because we live in a flat, borderless electronic world. And the raising of a capital today is not isolated jurisdictionally to your country, where you operate or where you're listed. So would you, as an entrepreneur, list your company on the New York Stock Exchange at a cost of $4 million a year, and if you don't comply you can go to jail for 20 years? Or would you list in London and raise the capital at a cost of about $100,000 a year to comply with their listing requirements, And if you did something wrong, you'd get a £10,000 fine. You know, it's not. It's just not an exercise that's worth considering. And the consequence has been that I think it's starting to impact on enterprise in America. That people have focused so much on conformance and spending so much time on conformance, they're neglecting the enterprise side. And the number of listed companies has reduced dramatically on American exchanges. Hence, New York trying to acquire London, failed. NASDAQ trying to acquire the CAC, failed.
Yeah, and but in South Africa, the King Code does have a bit of teeth, because of course it's in the listing requirements of the JSE.
It definitely has some teeth, absolutely, and not just in the listing requirements. Again, we go back to, and Len touched on it when he said with GFC that it's not that it's about risk management, but additionally now with King 3, you're seeing a greater emphasis on sustainability, on integrated reporting and combined assurance, which has a forward view thinking in terms of, are we going to be here in 20 years' time? What's our 2050 vision? Are we going to be here? And are we taking all our stakeholder requirements into account? Mervyn mentioned earlier with King 1 that there was less thought, or prior to King 1, there was less thought around where did the money come from and how it was made, as long as we're making it. Now we are looking at the entire value chain and all the business processes in between to assess whether or not we are conducting our affairs on behalf of all in the best interests of the entity with the view towards longevity. And I think that's far more important. So again, whilst the teeth are there and it's been included in the listing requirements, you know, as long as there are people, there will be people to find loopholes in legislation and in compliance-driven rules and code. So I think that one must appeal to a higher
Is that just
standard.
a fundamental weakness of humans, Len?
Yeah, but I accept that one certainly needs a code so that you could standardize and benchmark practice. And as we have apply or explain, we can add, we can embellish what is peculiar to a particular organization. So I think it's absolutely key that a code provides you with certain concepts, certain principles that you can apply and then customize for your particular circumstance. So integrating the requirements of King 3 into the listing requirements of the JSE allows institutional shareholders to also benchmark and to observe the extent that companies are embracing sound corporate governance.
Yeah, and our listed companies are well known for having among the best corporate governance in the world. Of course, King 3 is being updated. Is it going to be King 4?
It's being reviewed and enhanced. Len sits on the King Committee, so he knows that we've had to issue a lot of practice notes because of changes, externalities, and clearly some of the principles, 75 principles, are not applicable, as Len's already pointed out, to NPOs. The question of raising capital doesn't apply to NPOs, etc. So we've got these practice notes out there. We need to take them in and put them into one document. Whether it's going to be a King 4 or not, as people have asked me, that's another issue. But we need to put it together, and so it's not a bit here and a bit there. So it is being reviewed and enhanced.
So it's not going to be a complete overhaul?
No, I mean the basics of King 3 will remain, because I think they're well rooted, and not because Len and I are on the King Committee, but it is seen at the forefront in the world on governance code.
But we will make it a lot crisper. Looking at King 4.
Are you going to make it more concise?
Absolutely. So we're looking at the heading of stakeholders, we're looking at strategy, the implementation of strategy, then the monitoring of strategy and stakeholder interests. So it's a revisit stakeholder communication. So under 4 headings that we will hopefully make it a more concise document from the 9 chapters that appear in King.
Because some of those detailed recommendations, with respect, are pretty long-winded and pretty onerous too, actually.
They can be. I think though that, the gentleman can input additionally, but I think there was probably a thinking to make it clearer and to issue guidelines at certain levels which enable rather than disempower. So I think there was probably method in the previous codes and the approach to it. I do think that there are some gaps in terms of, like Mervyn's alluded to, the NPO space, and also a different approach perhaps for the smaller businesses.
And King 4 or updated King 3 in about 2 years' time?
I think it'll
King
take
3
about
on
2 years.
steroids.
Within 2 years, we should be in a position
Okay,
to
I'll
release that.
quickly
But I
want
think
to-
we also need to recognize that King 3 is so broad in the sense that we combine policies, practices and principles. So if one articulates the principles well, you can develop the practices to follow that.
One of the issues facing companies today is the discussion of value. What does value mean? What is the value creation process that integrated reporting and integrated thinking requires? In about 30 seconds, what is value to you, Len?
Value, as Mervyn has indicated earlier, is looking at the present value of future cash flow. So how does one take and value a particular entity? But value creation is looking at the weighted average cost of capital of a company, or the risk-adjusted value of capital, and generating returns that are superior to what the cost of capital is. So you'll have content shareholders if you can create value on a sustainable basis going into the future.
But Mervyn, I'm sure you'll agree that you have a wider definition, so you would refer to total value of a company?
Well, we talk about the total contribution of total, we being the IRC. And it's a whole discussion happening now with 341 academics giving input on this. And the question is that business is at the junction of the economy, society and the environment. So how the company makes its money, the impacts of how it makes its money impacts on all three. So you need to inform in clear, concise and understandable language in your integrated report, not in IFRS speak or GRI speak, but in clear language. Because there's no metric by which people can measure the enhancement of the positive impacts on society and the environment, or measure the negative impacts on society or the environment. So you need to inform so they can make an informed assessment about total value, which embraces bottom line, positive aspects, negative aspects.
30 seconds, Faye, what is value to you?
Well, King talks about being an effective and ethical corporate citizen, and for me that's where the value and value creation lies, where the entity needs to ensure that it is contributing towards sustainability for and on behalf of all stakeholders, acting within the best interests of the entity. So whilst I agree with the inputs, I think that one must avoid a narrow view in that we have to act on behalf of the whole. And given that we are now operating in a global village, we've got to be far more sensitized to what that means in terms of contributions to the economy, to the environment, and to our society of stakeholders.
Yeah, and it's important for a company to note that if you keep your stakeholders happy, you have a better chance of longevity as a company. Happy stakeholders, happy company. Thank you so much. And thank you so much for joining us. There'll be more on doing business in the 21st century in next week's show. And if you have a question you would like answered by our experts or to make a comment on the show, please send an email to the address on your screen now. We'll see you next week.
Now is the time for change. Doing business in the 21st century was proudly brought to you by Nkonki, the external and internal audit assurance providers. Log on to nkonki.com to